What's going on, you guys? My name is Zach Hartley, and in this video, we are going to talk about what you should be doing and how you should be thinking as the market is crashing. I'm going to prove my point with a couple of historical charts. I'm also going to share with you the trades that I've made so far this week. Here's everything you need to know. Let's go. Okay, so my strategy for handling a market crash, number one thing that I am trying to do is one, preserve my capital and make sure that I am protected from the downside. And if my stocks fall anymore, I'm going to get out of them. However, I am looking at this crash and any crash realistically as an opportunity to buy great companies at discounted prices. Over the long term, if you buy good companies and great companies, or even if you're just invested in the market overall, you're going to do well. You're going to do 7 to 10% over the long term, any time period over 10, 15, 20 years, you're going to do well on it. And so the more that you can invest, the more that you can put into the market as the prices basically go on fire sale, the better value you're going to get as long as they're going into great companies. And so my strategy as the market drops is to make sure I secure my positions, I free up as much cash as possible, and I am going to try and buy great companies. Now, the reason that this is my strategy and the reason that I am going in to buy great companies is because great companies will be the first companies to recover as soon as the market starts to turn around, which it always does at some point. The market turns around and we start to move higher. And secondly, this will provide me with the best ROI over the long term. When markets crash and you go through a fire sale and everything is dropping, this is an opportunity to buy the best companies in the market at a discount. Yes, you're probably taking a hit somewhere else in your portfolio. You're probably losing, and it's probably going to be tough to scrape together some money to get back into the market. But this, unfortunately, is the best time to be spending your money and buying up great securities, because the stocks that are good companies, the great companies, will be the first ones to recover, and it's going to give you the best ROI because they're going to be great companies over the long term. Now, let's talk about what is a great company. This is my criteria, and this is what kind of goes through my head as I look at a company. First thing is they have to have been around for at least 5 to 10 years. They have to have some type of track record. I have to be able to look at some level of financials and see growth. I have to be able to do some level of due diligence, and they have to have been around for 5 to 10 years for me to be able to do that. Secondly is their business model. They have to be fantastic at making money. Google ad revenue is a fantastic way to make money. Shopify hosting their platform is a fantastic way to make money. There's a lot of different excellent business models out there. Square, sending a reader to everybody that owns a little booth or a stand to process transactions. That is an excellent business model. So the company has to have an excellent business model that's pretty much a cash printing machine. That's what I'm looking for in a great company. The third thing that it must have is room for growth. I have to see consistent growth over the history, and I have to see a path forward as to how they're going to maintain or continue to grow revenue in the future. For tech companies, it's pretty easy. It's not very difficult to scale. But if you're a hardcore product company like Apple, you have to be able to see a little bit of a product future in the path forward. And so really nice about Apple is that's pretty easy to see, but you have to be able to see that. Next thing is strong financials. Apple blows it out of the water here. They have one of the strongest balance sheets in the world, so no question there. But this is really, really important because the companies with the strongest balance sheet and the strongest financials are going to be able to weather the crash the best. And that's one of the reasons that you want to be buying great companies, is because hopefully everything goes down. Hopefully it's a fire sale and everything crashes, because it means that it's going to be an overreaction and you now have an opportunity to buy Apple or any of these great companies at reduced prices that are below the market value, and that's how you get the best returns. Lastly is they have to have great management. If you look at the team and you look at the CEO, the CFO, and the directors of the different departments that are crucial to the business, you have to have 100% confidence in them. It's super, super important, because investing in a business is literally half management. Like, the people that are running that business is just as important as the business model, because if they can't execute, the business model is worthless. It doesn't mean anything if you don't have a management team that can execute. And so by investing in the people and actually believing in the people and looking through them and doing your due diligence in the people, it helps. Even if they have a mediocre business model, they're going to be able to execute it to a T, and that's going to help them generate profit. So management is extremely, extremely important, and the company has to be more important in 5 to 10 years. I can tell you for a fact that Amazon is going to make more deliveries 10 years from now than they do right now. I can tell you for a fact that Facebook is going to have more traction in 10 years than they do right now, and I can tell you for a fact that Apple is going to have more products 10 years from now than they do right now, and they're probably still going to dominate the consumer electronics electronics market. So there's a lot of room for growth in all of those companies. And I'm going to give you my list of great companies right here. So this is just kind of my short list of the companies that I want to buy into, I want to own shares of, because I think that these companies fulfill all of the basically checklist on the last page that we went through. I think they're all going to be more important in the long run. I think they all have excellent business models. I think they all have excellent management. And these are all companies that I would be proud to hold in my portfolio for the next 5 or 10 years. Now, just to give you an example of this and to kind of justify why I think you should be buying during a crash and buying as everything is falling, if you look at Square, so this is basically that consumer payment, the little white square that you see at markets or different places. It's really, really great company. They have an excellent business model and they're really expanding the product offering that they have. But if you looked at Square during the last kind of market crash in March of 2020, the stock went from a high of $87.25 down to a low of $32.33, basically at that midway through March point, which means you could have very easily bought Square for in the 30s to 40s, no problem. You had 4 or 5 days in here, that maybe 6, 7 days in here that you could have bought Square for inside of the 30s or $40 range. And now, if you look at the Square stock chart up to today, the stock hit a high of $283.19, and it's currently trading at $216.44 after the last week of apocalypse that we've had in the technology industry. It's still like 4, 5, 6 times what it was at the bottom of the last market crash. And so I really hope that Square falls even further, because I'm not invested in it yet and I really want to own this company. I think it's a fantastic company. It's a great business model. They have great management. I like everything that they're doing. And if you had bought during the dip, during the crash, on the last basically market crash, you could have got in for $30 or $40. It's now sitting at $216, and you would have been doing extremely well. Now, Square, you could argue, is maybe one of the smaller companies. Let's look at Apple, which is one of the largest companies in the world. And now you have to remember that these numbers are after a split. So Apple was trading at $81.96 at the high. That was somewhere in February here before it fell to $53.15 at the bottom of the basically pandemic here in middle of March. And updated to today, you can see that Apple hit a high of $145 and now it is trading at $121. It has more than doubled since the basically lows of the last crash that was not even a year ago today. So even after the last terrible kind of 2 weeks we've had in technology, if you had bought at the bottom of the pandemic, at the bottom of the crash, when everything else was falling, you would have more than doubled your money in less than a year. So this is just justification of why you should be buying as everybody else is selling. When everybody is greedy, that's when I am fearful. When everybody is fearful, that's when I am greedy. I don't know who the heck said it, but God, they were right, because in the long term, that is definitely by far the best way to get into great companies, is when the market drops and the market crash and everybody else is scared. It is very, very proven that that is the best time to get into some of these stocks. So what am I doing? I know you're probably asking me that. Well, I am personally putting cash into my investment accounts because I hope the market falls even further, because I want to buy into these companies at even cheaper prices, because I know in 3, 4, 5 years from now, Google, Apple, Facebook, Microsoft, Tesla, all of these companies are going to be worth a whole lot more than they are today. So I plan to buy great companies at discounted prices. I'm not super focused on any of these super volatile, crazy tech, biotech companies right now. I'm super focused on buying great companies at discounted prices. And lastly, I think these stocks are going on sale, and I will be buying as everyone else is selling. There's a couple other YouTubers that are holding Tesla positions, and they're selling at big losses right now. And I can tell you right now, I'm the one that's taken up those positions in small amounts, but I did take a trade on Tesla this week, so I will tell you that. I took a small position in it because I think that as of right now, I think a lot of money is transitioning out of growth stocks and it's going away to dividend stocks, to REITs, to bonds, and into cash. However, if in the next kind of 1, 2, 3 weeks here, we start to see a recovery of money moving back into growth and technology stocks, I think a lot of that money is going to first go into Tesla, go into Apple, go into Amazon. And so I already have exposure to some of the other ones, but I didn't have exposure to Tesla. And so I do think that a lot of that money is going to go back into Tesla. And so I took a small position in Tesla. I took options in Tesla, And the reason I took Tesla over the other stocks is that I really want to buy Google, but Google has not dropped at all. Tesla has fallen by 30% in just 1 month, and so I do think it is oversold right now. I do think there's going to be some value in there. I am prepared to buy a little bit more if it continues to drop, but as of right now, I think when we see a recovery in the market and we see a recovery in tech, I do think that Tesla is going to be one of the first places that people put their money, so I am going to take full advantage of that upside. Now, if it doesn't work out, it's a small position for me. I'm not super worried about it, but I am going to capitalize on it, and it has a high risk reward because I'm trading the options. Now, my recommendation to you is that this is the time to buy great stocks at discounted prices. If you're going to be into the market, and I know it's difficult to find cash right now because you probably just took a hit, but I'm telling you right now, this is the time to be buying stocks that you're going to be proud to hold in the next 10 years. When your kid asks you 10 years from now, oh, what's in your portfolio? What do you have in your account? This is the time that you're going to want to be buying those stocks that you tell your kid about 10 years from now or whenever it is, because these are the time that the great companies are going to go on sale. This is the time to get involved in them. And I really hope that Google falls because I really want to get into Google. I think it's a fantastic long-term company, and I should have bought that one years ago. Now, if you guys get any value out of this video, remember to click that like and subscribe button. I sincerely appreciate it, and I will see you in the next video. Good luck trading, good luck investing, and hopefully next week goes a whole lot better. Talk to you soon.